Verizon Communications, a company that has been providing telecommunication services to many people in the United States for decades and has been a staple stock in the stock market. But is it a good buy today? Stick around to find out. Hey everyone, Stock Ninja here. This is episode 17 of Who Beat the S&P 500. On today's episode, we will be covering the telecommunication giant Verizon Communications. Stick around till the end of the video to see what I currently own in the communication sector and my plan with Verizon stock going forward. Verizon was founded in 1983 as the Bell Atlantic Corporation, after the U.S. Department of Justice mandated AT&T Corporation to break up the Bell system into 7 different companies, each a regional Bell operating company, commonly referred to as the Baby Bells. Bell Atlantic changed its name to Verizon in the year 2000, and as of today, Verizon is just 3 of the surviving Baby Bells, along with AT&T and CenturyLink. Let's see how much money you could have made had you held Verizon stock over the last 20 years. Had you invested $10,000 into Verizon exactly 20 years ago, with dividends reinvested, you would have a tidy sum of $37,569.47 versus a $32,508.10 of the S&P. That's a 275.94% total return, beating the returns of the S&P's 224.96% by around 50%, which comes out to an average annual return of 6.84% versus a 6.07% of the S&P in the same time frame. Verizon doing well to keep pace with the S&P the last 20 years. As always, if you're enjoying the content, don't forget to hit that like button and subscribe to the channel. Also, hit that bell notification so you don't miss out on any new videos. Verizon currently has a market cap of around $246 billion, making it a mega cap company. Verizon currently trades with the ticker symbol VZ and is listed within the communication sector with an industry focus in telecom services. Verizon is currently a member of the Dow Jones Industrial Average, S&P 100, and S&P 500 indexes. With the quarterly dividend distribution, Verizon pays during the months of January, April, July, and October. Verizon currently has a good dividend yield of 4.14%, which comes out to an annual payout of $2.46 per share. The payout ratio is also healthy at 51.60%. Also, when looking at the dividend safety score from SimpliSafe Dividend, we can see a very safe score of 87 out of 99. Next up is Verizon's dividend growth, where we can see solid numbers of 13 years of dividend growth, as well as 29 years of dividend payments without a reduction. Where Verizon is really lacking though is their dividend CAGR, or compound annual growth rate. The 10-year CAGR is at only 3.4%, and the 5, 3, and 1 in the 2% range. Verizon is typically considered to be a good income stock in terms of the dividend and would be a great fit for a dividend portfolio, but investors should not expect a lot of dividend growth. Verizon's fiscal year runs from January through December each year and is currently in fiscal year 2020. As fiscal year 2020 is not yet complete, we will look at their 2019 annual report. In fiscal year 2019, Verizon generated approximately $131.87 billion in revenue, a huge number, but when looking at revenue growth, it is extremely slow, basically flat over the last 4 years, with the marginal difference from the $131.62 billion they generated in 2015. Verizon currently has a PE ratio of 12.83 and a forward PE ratio of 12.41, which would indicate a slight projected increase to revenue in the future. When looking at Verizon's balance sheet, the most eye-popping number is definitely the amount of debt they carry. As of June 30, 2020, Verizon currently has long-term debt of $106 billion, along with short-term debt of $6.6 billion, for a total of over $112 billion in debt. Not exactly encouraging, given that looking back 12 months ago to June 30th of 2019, we can see an almost identical $113 billion in overall debt. Though not everything is bad. One of the plus points as far as our balance sheet is concerned is that Verizon currently has nearly $8 billion in cash or cash equivalents, which is up by nearly $6 billion compared to just 12 months ago. Verizon's balance sheet is often compared to their rival AT&T. If you would like a detailed look between the two companies, check out my buddy Ethos Investing. He just started a really cool series called Stock Wars, where he does a deep dive of metrics and compares major rivals. A T vs VZ Stock Wars video should be released soon, I'll link his channel in the description below. Now, let's take a look at how Verizon breaks down their business by operating segment. Verizon strategically reorganized their business in 2018 and now have just two reportable segments, the Verizon Consumer Group and the Verizon Business Group, with the Consumer Group making up the vast majority of overall revenue. They also have a corporate and other section that makes up around $7.7 billion in revenue as of fiscal year 2019. The consumer segment provides consumer-focused wireless and wireline communication services and products. Verizon wireless services are provided across wireless networks in the United States under the Verizon brand and through wholesale and other agreements. The consumer segment accounted for approximately 69% of overall revenue in fiscal year 2019. The business segment provides wireless and wireline communication services and products, video and data services, corporate networking solutions, security and managed network services, local and long-distance voice services to deliver various hot services and products. All these services are primarily provided to businesses and government customers. The business segment accounted for approximately 24% of overall revenue in fiscal year 2019. The corporate and other section includes the results of Verizon's media business, Verizon Media, and other businesses. This section made up the remaining 7% of revenue in fiscal year 2019. Overall, pretty straightforward as far as operating segments are concerned. That being said, according to their chairman's letter, it seems that Verizon is quickly ramping up anything related to 5G and have set goals for themselves to accelerate into that space in fiscal year 2020. Now, let's see how the company fared in the dot-com bubble crash, the Great Financial Recession, and how it's currently trading in the downturn in 2020. Verizon fell 57.81% during the dot-com bubble crash, falling about 7% more than the S&P's 50.41% decline. Verizon slightly underperforming the S&P during this time period. During the Great Financial Crisis, Verizon fell 41.43%, performing almost 16% better than the 57.61% decline by the S&P. Verizon doing a lot better during the Great Financial Crisis. During the downturn in 2020, Verizon fell 19.95% compared to the S&P's roughly 35.59% decline. Though Verizon fell during this time period, it wasn't as much of a drop as the S&P and held up fairly well. Also, interestingly enough, Verizon is nearly back to its share price that it saw in February of this year, just prior to the crash, currently underperforming the S&P as the S&P actually made an all-time high just recently. Overall, Verizon seems to be relatively stable and doesn't seem prone to crazy drawdowns that far exceed the overall market during recessions. Sure, there was a lot of volatility, but for the long-term holders, this is probably negligible. Headquartered in New York City with around 135,300 full-time employees, Verizon is currently led by CEO Hans E. Vestberg. Vestberg was appointed in August of 2018 and currently holds both chairman and CEO positions with the company. Vestberg succeeded former chairman and CEO Lowell C. McAdam. Prior to joining Verizon, Vestberg spent most of his career at LM Ericsson, which is a Swedish multinational networking and telecommunications company headquartered in Stockholm, Sweden, so he no doubt has the experience needed to lead Verizon. Vestberg currently leads an executive leadership team of 12 members. I would say half of them are relatively new, joining somewhere between 2017 and 2019, and the other half joined the company prior to 2017. So not too much depth in terms of Verizon veterans, but after going through their management pages, all the executives seem more than qualified with their previous work history. Since Vestberg just joined the company about 2 years ago, we can take a look at the performance under both him and the previous CEO McAdam. Starting with McAdam, who led the company from 2011 to 2018, we can see a solid 50.22% increase in Verizon's share price. Looking at the share price under Vestberg, we can see a gain of just 9.36% over the last 2 years. Still relatively early in his tenure, but we have to keep in mind that Verizon historically is not a big mover of a stock. Looking at the institutions that currently hold Verizon stock, we have Geode Capital in 5th place with a relatively small 1.53% stake in the company. The first time Geode making the top 5 list in this series. Next is Wellington Management with a slightly higher 1.61% stake coming in 4th. In 3rd place we have SSGA Funds Management. with a 4.05% stake, SSGA making the top 5 for the first time as well. In second place is BlackRock with a 4.86% stake, and as we are all accustomed to seeing by now, coming in first, the Vanguard Group has a 7.57% stake in Verizon Communications, equaling a total of over $18 billion within the company. To me, the biggest risk factor when investing into Verizon is their massive debt load that has regularly been over $100 billion on the balance sheet. Though with interest rates at an all-time low due to the 2020 crisis, it is possible for Verizon to kick the can further down the road. That could give them more breathing room, but ultimately the debt issue will have to be addressed sooner than later. Also, competitors, especially T-Mobile, has been growing at a nice clip, slowly but surely eating into Verizon's market share. The problem with this is Verizon's revenue doesn't grow crazy numbers every year, and the loss in market share could have an impact on the bottom line. In my opinion, Verizon is a solid company that, along with AT&T and slowly but surely T-Mobile, has a stranglehold on the telecommunication services in the United States. Add that to the 5G changes that we will see in the very near future, and the company should have no problems chugging along, albeit at a very slow pace. The dividends are solid and the management team seems reliable enough, but that's about it as far as Verizon goes. Honestly, it's one of those companies that you can invest in, collect your dividend payments, and not have to worry too much about. That being said, their mountain of debt is quite concerning. Also, I didn't find too much information on their plan to address it. I took a look at their debt maturity, and they have notes expiring all the way in 2060, so it is quite possible that they can further extend that, or at least keep it from getting further out of hand. So where do I stand in all this? As far as the telecommunications sector is concerned, I am a holder of both Verizon and AT&T stock, with my AT&T position being the larger of the two. I do plan to add to Verizon in the future, but have been building my AT&T position as the company has been trading under $30 as of late. That concludes our analysis of Verizon Communications. Do you guys own any Verizon? Thanks for watching, everyone. As always, if you enjoyed the video, don't forget to hit that like button and subscribe to the channel. It really helps out a small channel like mine. Till next time, Stock Ninja out. I am not a financial advisor, and this video is for educational purposes only. Please do your own research before buying or selling any stocks seen in this video.